Welcome back, everyone. We're diving into the Danaher Corporation today.
DHR, that's their ticker symbol.
Right. And our viewer wants to know if it would be a good fit for their portfolio.
Always a good question to ask.
So to get started, we have a whole stack of articles and reports about Danaher. Let's see what we can find out about this company.
Well, first off, Danaher has a really interesting history.
Oh.
Yeah, it all started back in 1984. Two brothers, Stephen and Mitchell Rales, they decided to shift their business.
What were they doing before?
They had a real estate investment trust called DMG Inc.
Okay.
But in '84, they changed it up, focused on manufacturing instead, and they came up with a pretty cool name for their company.
Danaher.
Exactly. And they actually named it after a creek in Montana.
A creek?
Yeah, a place where they used to fish and just, like, brainstorm ideas.
That's pretty cool.
So from those early days, Danaher has grown a lot. They've acquired, hundreds of companies over the years.
Wow, hundreds.
Yeah, and that's a key part of their strategy, actually. They've built this global conglomerate by, bringing all these different businesses together.
So they're not just buying up random companies. There's a method to it.
Oh, absolutely. They're very strategic about it. Their focus is on science and technology companies.
Makes sense?
Yeah.
That's where a lot of growth is happening these days.
Exactly. And they look for companies that are in attractive markets, ones with a lot of potential.
So they're really looking to the future, trying to anticipate where the next big opportunities will be.
That's the idea. And you know what? Over 50% of their revenue today comes from companies they've acquired just in the last decade.
Wow, so they're putting their money where their strategy is.
You could say that. And just to give you a few examples, they bought Paul Corporation in 2015. That was a big one. $13.8 billion.
What does Paul Corporation do?
They specialize in filtration, separation, purification technologies, all that kind of stuff.
Interesting.
Then in 2016, they acquired Cepheid,
Cepheid.
a molecular diagnostics company. That one was for $4 billion.
Okay. And what about more recently?
Well, in 2020, they made a huge acquisition. GE Life Sciences biopharma business, they picked that up for $21.4 billion.
$21 billion? That's massive.
It is, and they renamed that business Sativa. And then this year, 2023, another big one. They acquired Abcam. That's a global leader in antibodies and reagents.
I see. So they are very active in the life sciences space.
You got it. They paid $5.7 billion for Abcam.
Clearly, Danaher is not afraid to spend big to achieve its goals.
Nope, they're definitely playing the long game. So how's all the spending working out for them?
Yeah, let's talk financials. Any investor needs to know how a company's performing, right?
Right. Well, as of today, December 17th, 2024, Danaher offers an annual dividend of $1.88 per share.
Okay. What about the yield?
The yield is 0.46%.
And how has their dividend been doing?
Pretty good, actually. It's been growing steadily for the past 6 years.
Steady growth. That's a good sign for investors looking for income.
Yeah. And the one-year growth rate is actually 8.21%.
That's not bad at all.
Mm-hmm.
But we also need to look at their overall financial health.
Definitely. Their payout ratio, which is the percentage of earnings paid out as dividends, is currently at 20.59%.
So what does that tell us?
Well, it's a pretty low figure, relatively speaking. That suggests their dividend is, pretty sustainable. They have room to potentially increase it down the line.
That's good to hear. Anything else we should be aware of on the financial front?
Well, Danaher also has a share buyback program in place.
Oh, right. They announced that they were going to buy back up to 20 million shares.
Exactly. That could be a good sign. Companies often buy back shares when they believe their stock is undervalued.
So it could be a signal that they're confident in their future performance.
Possibly, yes. But it's important to note that not everyone agrees with that assessment.
Oh.
Zacks, a well-known investment research firm, they actually have a sell rating on Danaher right now.
Interesting. Why is that?
They're concerned about potential overvaluation, so, it's always good to get different perspectives.
Absolutely. We need to consider all the information and make our own judgment.
Exactly. But beyond acquisitions and financial performance, we should also look at their innovation pipeline, especially in their science division.
Right. That's where they're really shaping the future, right?
That's the one. They're heavily invested in research and development.
And what are some of the areas they're focusing on?
Well, they're all over life sciences, genomic medicine, diagnostics, bioprocessing, you name it.
It's on the cutting edge.
It is. And they're even looking at how artificial intelligence can be applied in these fields.
So they're not just following trends, they're trying to set them.
That's their goal, for sure. And they're not
Mm.
doing it alone either. They're very collaborative in their approach.
How so?
They work with all sorts of partners, customers, research institutions, startups.
So they're really tapping into a diverse range of expertise.
Exactly. They even collaborate with competitors sometimes. They've also got a scientific advisory board made up of leading experts in the field.
It sounds like they're doing everything they can to stay ahead of the curve.
That's the impression I get. They're really committed to innovation.
But all this innovation and research, it's got to be expensive.
Right, for sure. But they seem to be managing it well, financially speaking. And their market share is pretty impressive, too.
Do we know exactly how much of the market they control?
Well, specific market share figures are hard to come by, but they're definitely leaders in a lot of the markets they operate in.
And they're a global company, right?
Absolutely. Over 62,000 employees around the world.
That's a lot of people. Must
Yeah.
have a pretty big economic impact.
No doubt about it. They're involved in so many industries: healthcare, environmental solutions, product identification, industrial technologies. Their reach is huge.
And I remember reading that they played a pretty significant role in the fight against COVID-19.
Oh, yeah. Their subsidiary Cepheid, they produced a lot of those COVID tests.
So they're not just focused on profits, they're also trying to make a difference in the world.
That's the picture they're presenting, yes. But it's not all rosy, of course.
Oh,
Well, there's been some controversy surrounding the pricing of those COVID tests.
right. I remember reading about that. Some people felt like they were charging too much, taking advantage of the situation.
That's one perspective, for sure. But it's a complex issue. There are arguments to be made on both sides. We're not here to take sides, just to present the information and let viewers form their own opinions.
Agreed. It's always important to consider all sides of the story. Now, one thing I'm curious about is their services business. Do they have a big focus on services, or is it mainly products?
That's a good question. Most of the information we've seen emphasizes their product offerings.
So it's possible they have a services component, but it's not their main focus.
That seems to be the case, at least from what we've gathered so far. But it might be something worth digging into a little deeper.
Okay, we'll keep that in mind. Now let's circle back to their dividend policy and share buybacks.
Sure. So, as we mentioned, their annual dividend is currently $1.08 with a yield of 0.46%.
And they've been consistently increasing their dividend, which is a positive sign for income investors.
Right. And their buyback program, where they're authorized to repurchase up to 20 million shares, could indicate that they believe their stock is undervalued.
But we also have to remember that Zacks has a sell rating on Danaher.
That's right. They're concerned about potential overvaluation.
So there are different perspectives on their valuation.
Definitely. It's a reminder that investing always involves some level of risk.
And it's up to each individual investor to weigh the pros and cons and decide if a particular stock is right for them.
Absolutely. Informed decision-making is key.
Now, let's step back in time for a moment and look at Danaher's history.
Their past can offer clues about their future, right?
Exactly. We already touched on their early years, their shift from real estate to manufacturing in 1984.
We talked about how they named the company after a creek in Montana.
Right. It's a reminder that even massive corporations like Danaher start somewhere small. They have humble beginnings.
It's a good point. So we've talked about how important acquisitions are to Danaher's growth.
Right, it's a core part of their strategy. But I'm curious, what happens after they acquire a company?
It's not like they just buy them and let them run wild. They have a whole system in place for integrating those companies.
Makes sense. You can't just throw a bunch of businesses together and expect them to magically work as one.
Exactly. Danaher's approach is all about recognizing that each company they bring in has its own strengths, its own culture.
So they try to preserve what's working well, rather than forcing everyone into the same mold.
That's right. They want to maintain those positive aspects while also providing the support and resources these companies need to grow within the larger Danaher structure.
It's like building a network of successful businesses that are all interconnected.
A good analogy, each one contributing to the overall success of the larger entity.
But, acquisitions always come with risks, right? What if a company doesn't perform as well as they expected or the integration process is messy?
You're right. Those are definitely risks they have to consider. To mitigate those risks, Danaher has a very thorough evaluation process for potential acquisitions.
So they don't just jump at any opportunity that comes along.
No, they're very careful. They assess things like, the attractiveness of the market, the target company's track record, the potential for value creation.
They're looking for companies that align with their long-term goals and that can really add something to their portfolio.
Exactly. It's all about strategic growth, not just growth for the sake of growth.
And this approach has been working for them for decades.
That's right. They've been refining this strategy since their early days in manufacturing, and they have dedicated teams in place to ensure that the integration process runs smoothly.
So they're providing support to those newly acquired companies to help them transition into the Danaher family.
Yep, that's the goal. Now, speaking of their history, let's revisit some of their early acquisitions.
Okay. We already talked about Isco Hand Tools in 1990. That was a big one for them, giving them a solid presence in the hand tool market and that major contract with Sears.
Right. And then there was Armstrong Tools in 1994 that brought brands like Armstrong and Allen into the fold. It really solidified their position in that market.
So they were doubling down on hand tools. Makes sense. Tools are always in demand.
Exactly. It was a smart move. And just a year later, in 1995, they made their first acquisition on the European mainland.
Oh, right. They bought Henksler, a German company.
That's the one. They make counters, printers, relays, sensors, that sort of thing.
So they were starting to think globally even back then.
Absolutely. Global expansion has been a key part of their strategy for a long time.
And then in 1999, they acquired Haksch.
Yeah, the water quality analysis company.
Right. That was their entry into a whole new market.
Exactly. And it shows their ability to spot emerging opportunities and, capitalize on them.
So even in those early years, we can see the seeds of their current strategy taking root.
Acquiring companies with strong market positions, expanding into new areas with growth potential, it's all there.
It's fascinating to see how their past has shaped who they are today. Now, beyond acquisitions, Danaher is also known for its focus on operational excellence. They have this thing called the Danaher Business System, right?
That's right. It's based on the Japanese philosophy of Kaizen, which emphasizes continuous improvement.
So it's all about finding ways to be more efficient, more customer-focused, always striving to get better.
Exactly. The Danaher Business System covers everything from manufacturing processes to customer service.
It's a comprehensive approach to running their business.
It really is, and it's a big part of why they've been so successful at integrating acquired companies and driving performance across their diverse portfolio.
So it's not just about buying the right companies, it's about knowing how to manage them effectively.
That's a key takeaway. Now, shifting gears a bit, let's talk about ESG factors. How does Danaher address environmental, social, and governance considerations in their operations?
Yeah, that's becoming increasingly important for investors.
For sure. Investors want to know that the companies they're investing in are operating responsibly and ethically.
So what's Danaher's track record like in this area?
Well, they do publish sustainability reports, and they have information about their ESG goals on their website.
Okay, so they're at least being transparent about their efforts.
That's a good sign. They outline their initiatives related to environmental sustainability, social responsibility, and ethical governance.
But we always encourage investors to go beyond what a company says about itself and do their own research.
I agree. It's important to dig deeper, look at their track record, see if they've had any controversies or challenges in these areas.
And ultimately, investors need to decide if Danaher's actions align with their own values and investment criteria.
That's right. It's a personal decision, but it's one that should be made with all the facts in hand.
So we've talked about Danaher's history, their acquisitions, their operational excellence, and their approach to ESG factors.
You've covered a lot of ground.
But now let's shift our focus to their current position in the market and their potential for future growth.
Okay. Where do we start?
Well, we know they operate in a wide range of markets.
Right. And they hold leading positions in many of them.
But it's hard to say exactly how much of the market they control, right?
Yeah. Precise market share figures can be tough to find, but their prominence in sectors like life sciences, diagnostics, bioprocessing, combined with all those acquisitions, suggests a pretty substantial market presence.
And they're a global company, which gives them a broader reach.
Absolutely. Over 62,000 employees worldwide. Their economic impact is significant.
They touch so many industries: healthcare, environmental solutions, product identification, industrial technologies. It's a long list.
It is. And they've also shown a willingness to contribute to global health initiatives, like with those COVID tests from Cepheid.
So they're not just focused on profits. They're also thinking about their role in the world.
That seems to be part of their message, yes. Now, one area we haven't explored in much detail is their services business.
Right. Do they have a significant service component, or is their focus primarily on products?
That's a good question. Most of what we've seen emphasizes their product offering.
So maybe they have some services, but it's not their main focus.
That's the impression I get, but it could be worth digging into further.
Okay, we'll keep that in mind. Now let's circle back to their dividend policy and share buybacks.
Sure. So their annual dividend is $1.08 with a yield of 0.46%.
And they've been consistently increasing their dividend, which is good news for income investors.
Right. And their buyback program, the one for up to 20 million shares, suggests they might believe their stock is undervalued.
But we also have to remember that sell rating from Zacks.
Yep. That's always worth considering. They're concerned about potential overvaluation.
So, as always, there are different perspectives to consider.
Exactly. Investing is all about weighing the risks and rewards.
And making informed decisions based on all the available information.
Couldn't have said it better myself.
All right, so we've covered a lot of ground with Danaher. We've looked at their history, their strategy, their financials, all that good stuff.
A pretty thorough overview, I'd say.
But now, the question that's on everyone's mind, is Danaher stock, DHR, a good fit for your portfolio?
That's the million-dollar question, isn't it? And the answer, as with most investments, it's not a simple yes or no.
It depends, right?
Exactly. It depends on your individual goals, your risk tolerance, how long you plan to hold the investment. Lots of factors to consider.
Okay, so let's break it down a bit. What are some of the key things to think about when it comes to Danaher?
Well, their track record of growth through acquisitions is impressive. There's no denying that.
They've been very successful at identifying and acquiring companies that strengthen their portfolio and drive revenue growth.
That's right. But we also have to acknowledge the inherent risks that come with any acquisition strategy.
What do you mean?
Well, a poorly executed acquisition or a messy integration process, those can have a negative impact on their performance.
That's true. It's not a guaranteed success every time.
Exactly. Then there's their financial performance, which, as we've seen, has been pretty solid.
Strong dividend growth history, a healthy payout ratio, a share buyback program in place, those are all positive signs.
They are, but we can't ignore the concerns about potential overvaluation.
Right. We talked about that sell rating from Zacks.
They're worried that the stock price might be getting ahead of the company's actual earnings and growth prospects.
So it's a mixed bag, really. Some things to be optimistic about, some things to be cautious about.
That's a fair assessment. And then there's their innovation pipeline, which is definitely a strength.
They're a leader in a lot of those high-growth fields like life sciences, diagnostics, bioprocessing.
And they're constantly bringing new products to market, so they're not just resting on their laurels.
They seem to be well-positioned for future growth, at least in those areas.
That's the sense I get. Their science division is particularly interesting. They're tackling some really complex problems in biomedicine.
Like what?
Well, they're working on things like genomic medicine, next-generation biomanufacturing, even the application of artificial intelligence in healthcare.
Cutting-edge stuff.
It is, and they're very collaborative in their approach, which I think is smart. They work with customers, researchers, startups, even competitors sometimes.
So they're tapping into a wide range of expertise.
Exactly. And they have that scientific advisory board with all those experts to guide their research efforts.
Sounds like they're doing everything they can to stay ahead of the curve.
That's the impression I get. But of course, the rapid pace of technological change, it's a double-edged sword. What's groundbreaking today might be obsolete tomorrow.
That's true. Investors have to consider whether Danaher can keep up, whether they can continue to innovate and adapt.
That's a key question. And then we have those ESG factors, which are becoming increasingly important to investors.
We talked about the controversy surrounding Cepheids' pricing practices.
Right. A reminder that Danaher, like any large corporation, isn't immune to ethical challenges.
Investors need to decide if they're comfortable with that, if Danaher's values align with their own.
It's a personal decision, but it's one that shouldn't be overlooked.
So where does all this leave us?
Well, we've provided a lot of information about Danaher, both the good and the bad.
We've explored their strengths, their weaknesses, their opportunities, their risks.
We've tried to present a balanced view based on the information that was available to us.
But ultimately, the decision of whether or not to invest in Danaher is up to each individual investor.
That's right. We can't make that decision for you.
We always encourage our viewers to do their own research, dig deeper into the things that matter to them, and decide if DHR aligns with their investment goals and their values.
Informed investing is the key to success in the market.
So that's our deep dive into Danaher Corporation. We hope you found it helpful.
We'd love to hear your thoughts. What stood out to you about Danaher? What other questions do you have?
Leave a comment below and let us know. And don't forget to subscribe to our YouTube channel for more in-depth analysis of companies and industries that are shaping the world of investing.
Tell us what stocks you want us to deep dive into next.
Until then, happy investing.